investor base for emerging market sovereign debt is both stable and diversified. We will show you some data on emerging market sovereign debt that will help you see that this is an asset class that has grown steadily over the years and has attracted a stable and diverse investor base. This means it is an asset class that is suitable both for new long-term investors, thanks to existing similar participants, and is also suitable for short-term outperformance opportunities, thanks to the involvement of cyclical participants. First, let's look from the supply perspective. Who are the issuers and what kind of bonds are they issuing? Then, we'll look from a demand perspective. Who are the buyers and how do they behave? The market has grown to over $10 trillion, driven by the growth of local currency issuance, particularly from China. From a demand point of view, it is useful to look at the residency and sector of the buyers, whether they are locals or foreigners. Increasingly, as economies and markets develop, locals become sponsors, as local pension funds and insurance companies emerge and hold domestic currency-denominated bonds, with long investment horizons in mind. It becomes clear that foreigners hold large amounts of EM sovereign bonds, and we know that their activity can be more cyclical. The data shows they're an important source of marginal demand, but there is a good balance between local and foreign demand. What we at TransFlow focus on is another way of looking at demand, the behavior of the investor. And here we have the same graph without China too. Some investors are constrained to hold certain assets, others are not. Those who are constrained tend to be stickier investors. We find that very constrained, EMD dedicated investors play an important role in EM sovereign bond markets. We're also finding that somewhat constrained, global bond, including EMD investors, are also playing a larger role. The bulk of the debt is local currency issued and held by locals. In less developed markets, there is a substantial proportion that is hard currency and held by foreigners too. These final graphs show the breakdown of the residency and type of holder, again reinforcing the message that the majority of debt is local currency issued and held domestically. For more information, please speak to TransFlow.